What's up, everybody? On this week's real estate deal breakdown, I'm actually going to give you a lesson in history on my first ever rental property that I bought and how it increased my net worth over $200,000. I'm going to tell you exactly why I bought the property, and I'm going to share with you how it's created a pretty good amount of wealth just through one property. And I'm going to share the principles on how you can use rental properties to build wealth if you don't want to invest in the stock market, etc. So before I get into that, if you're not familiar with who I am, my name is Greg, and I've been a full-time investor now, landlord, house flipper, wholesaler for 10 years. I've done 500 properties at this point that have closed. I got a lot of experience, and I've had a company up here, Velocity House Buyers, for the last decade, and we've been the premier company to buy houses in the Hudson Valley. We also operate in Washington State, where I live, and in Delaware. So if you get value from this video or this podcast, depending on how you are consuming it, do me a favor. If you're on YouTube, subscribe to the channel, like the video if you think it's valuable. If you're listening to this on Spotify or Apple Podcasts, if you can share this with somebody who you think would get value from it, that would be great. So let's talk about my first ever rental property. And the reason I'm talking about this deal today is because I was looking back and kind of, as I've been doing this for, as time goes on, I'm like, what deals really moved the needle and what got me to really want to buy and hold more properties despite rentals being a pain in the butt, which, is par for the course. And the first rental I ever did, honestly, was probably the best rental I bought. And I have, almost a dozen of them now. So quick story. I wholesaled the house down the street from this rental property, and I got it for like 50 grand. And this was 2020, so it was a while. It was maybe 2019, actually. It was a while ago. And I remember I'm like, man, I shouldn't have wholesaled that house. Like, I should have just either flipped it or made that one a rental. This was down the street from the current rental I'm going to talk about. And I'm like, man, the next time I get something in this area, I'm going to have to try to keep it or flip it because it's just, it's too good of an area to screw around in. It's up in Orange County in the Middletown area. And I remember I got a lead. It was, it was this rental that I bought, and the lady, she lived at a state, and the property was, in like okay condition. There was long-term tenants in there, and, she was like, I don't want to have to sell it and let the tenants know. I want to do this like completely sight unseen. And I knew that I bought the house for 50 grand down the road, and that thing was a total disaster. This one was allegedly in better shape, and, I knew it was probably worth at the time 170. Maybe 180. This was at the time, and boy, have the values gone up since then. Spoiler alert. So I said, listen, I'll give you $65,000 cash sight unseen for this property, and I'll buy it with the tenants inside. So she agreed to that. She didn't want to deal with the tenants anymore and whatever. So I ended up getting a hard money lender to fund the deal, and I bought it sight unseen, just without any access. And I just kind of was like, let's go. So I bought it, closed on it. And then I immediately went over there after I owned it, and I met the tenants, and I told them I bought the house, and they were thrown off, which is understandable. And I basically said, listen, like, I want to work something out with you guys. I want to figure this out. And I actually had them in that property for like 2+ years after that, maybe even more, 3+ years. But here's the magic on this property. So I bought this thing for $65,000. I got a hard money loan, I think for 50. So I came out of pocket 15 grand plus the closing costs. I was probably out of pocket $25,000 max on this property. It's worth at the time 180, and it was rented, so there was income coming in from it, which was awesome. So now I'm like, well, if you want to do the BRRRR, you got to refinance, right? At this point, there wasn't any rehab at the time. It was already rented. It had some deferred maintenance, but nothing crazy. So I found a local credit union in my area in the Hudson Valley, and I said, hey, listen, I got this rental property. I want to do a cash out refinance on this. I don't want to do a rate and term. So the bank agreed to give me 100 grand. This was a refinance loan, by the way, and this is a 15-year mortgage. And at the time, the interest rate was 2.9%. So my first ever interest rate I ever paid as a real estate owner was 2.9%. Boy, those days are over. Probably will never see that again. But at the time, it was good. I'll tell you what. So they gave me a loan for 100. I bet you their closing costs were probably $11,000, which is a ripoff, but it is what it is. So the net available on this was $89,000, and I owed 50 to the hard money lender. So there was 39 grand left over, and I had $25,000 of my own money into this property to come up with the down payment plus the closing cost on the original purchase. So $25,000. So I got paid $14,000 in tax-free money to own this property. And now I owe 100 grand on this property, worth 180, and it was renting at the time for maybe $1,250 or something like that, $1,300. It wasn't anything crazy. But it covered the mortgage. I know the rent was covering them. It might have been $1,500 actually. It was covering the mortgage. I was making like about $300 a month off the bone at the time, and I already got paid to freaking buy the property. So that was awesome, right? So what ended up happening on that situation was over time, the tenants eventually left. At this point, I refinanced, I believe in 2021. I bought it in 2020. And now what happened, I mean, all across the country, especially in the New York area, is the values basically doubled, right? The values went through the roof when COVID happened. People were getting out of New York City. They were moving to the Hudson Valley. They were moving to Long Island. They were moving to Jersey. They were going to Connecticut. They were going basically all over the city. So the values went through the roof. The interest rates were super low. And now I'm just fast forwarding to today, like the current situation, 2026. That property right now is worth in between $300,000 and $320,000. I owe $72,000 on it right now because I've had the note for 5 years now, and I've paid basically a quarter of it off. If it's a 15-year note, there's 10 years remaining, and as you keep paying a note that's, AM schedule, you pay more principal down. So like the longer I have it, the more principal I'm paying down. I owe $72,000. The property's worth, let's call it $315 to be conservative on this thing, $315. And I've, ever since the tenants moved out, I did put some upgrades into it. I updated the kitchen, I updated the bathroom. So I did have some out of pocket on this. But in theory here, we got a $300,000 property, or sorry, what did I say? $315. I owe $72,000 on this thing currently. So there's $243,000 of equity there. That's just sitting there. So a lot of people are going to be like, well, why don't you refinance that again? Maybe. I don't really need to do that. There's a shitload of equity there. I could do that and it still would cash flow, but then I'm, obviously getting out of a rate that's super low you'll probably never see again. It's like an antique, Or, Greg, why don't you sell that thing? You sell that thing, you could make an absolute boatload of money. Yeah, I could do that, but at the same time, why would I do that? Like, property's going to keep going up in value, most likely. I mean, it's real estate. It generally goes up 4 to 5% a year just with inflation. And I got 10 more years left on that note, and then it'll be free and clear. So now where we're at is I owe 72. The property's worth like 315. It's in good shape. It's pretty modern at this point. I put like new floors in and shit. We have a tenant now. I have a new tenant. Surprise alert. They're paying $2,200, I believe, off the bone, which is a little less than market rent. Market rent on this thing's probably $2,400, $2,500, but my payment on this property is $1,100 right now, or maybe $1,200. Let's call it $1,200. It's probably less than that, but let's just say $1,200 to be conservative. So now we have $1,000 a month spread between what I'm collecting and what I'm paying out. That's got $240,000 plus of equity. And there's 10 years left on the note. And, assuming I don't refinance, it'll be free and clear in basically a decade. And I would assume the values in 10 years on that property probably be $380,000, $400,000, right? So how do you take a little investment of my initial capital investment on this was $25,000 to get the hard money loan. That turned into a $14,000 profit when I refinanced the house because I bought it at a discount, and it's a wealth machine. But the point of this video is not to tell you how smart I am at doing these deals. It's to show you if you don't flip every house and you keep the best and wholesale the rest, which is a little tagline that I've heard before. Keep the best, wholesale the rest. Keep the best, flip the rest, whatever you want to call it. You can build a lot of wealth, right? Because when you buy and hold property and you get it at the right number, now the key here is you got to get these properties at a discount. And like I bought this one at a discount back in the day, and now it's worth a lot more. But even at the time, it was still a deal. But if you can find the best deals, and instead of flipping them for a huge payday, have the foresight to hold on to these properties, you can create tons of wealth. And it's not illogical to become a millionaire if you just do the math. If you have a handful of properties that have hundreds of thousands of equity, you will be a millionaire, right? It is just math. It is not theory. It's not hope. It's not wishful thinking. It's just math, right? So what you need to focus on is you need to get your active income and your deal flow to a point where you can do this business full time, preferably. And then once you have enough deal flow to support your basic lifestyle needs, when you get deals that you can acquire in good locations at good numbers, you need to keep the best properties, right? You need to have the discipline to keep the best properties because that is how you really build the wealth. It's through the holding of the real estate, not the flipping of the real estate. And you can build wealth flipping real estate if you save the money, right? But you're going to get taxed. You're going to have ordinary income tax. And these rentals, I'm telling you, despite them being a pain in the butt, because boy, did I have my fair share of challenges with this property, and that happens with any property. They are worth keeping if you understand that the wealth is made through the rental properties. That's the long game. That's the equity buildup. That's the principal pay down. And in this case, this is the cash flow coming in $1,000 a month, whether I want to work or not. I got the rental working for me. So that is a case study here. I wanted to share that with you. And the takeaway here is not to show you how smart I am at doing deals. It's to show you what is possible in this business when you really understand you got to keep the best and then flip or wholesale the rest. And I didn't make that line up. I heard that from somebody else. So, don't trademark me on that if whoever hearing this says, oh, that's my saying. Keep the best, flip and wholesale the rest. This was my first rental, and at this point, probably my favorite rental from a financial standpoint. And if you like this content, do me a favor. Let me know. Send me an email. Shoot me a message on Instagram if you like it, or a YouTube comment. And as always, if you're in the Hudson Valley or you're in Delaware or you're in the Seattle area, you have a house like this you want to wholesale to me, or you have a house like this, maybe you want to wholesale with me together, send me an email, greg@velocityhousebuyers.com, or drop me a DM on Instagram @grego37, and I will see you on the next real estate deal breakdown. Take care.